on Groundhog Day. I think I said that just like the movie from the radio that Bill Murray woke up to for whatever 30 days in a row and he was in the loop. Anyway, let's get started for the poll report. We know there's risk in trading. Please don't always use trade capital only. You know the deal there. Let's get into the charts. We have Meta up about $65 from yesterday's close. That is good. We took a trade on this one, an equities on demand, a Delta trader. And the problem is I capped my upside at $30 and the thing blew it off by 65. But that was 2 to 3 standard deviations higher than expected. I will show you some of the formula that we put together for Meta. We were looking at about a $54 move, and best part is it actually delivered. So the average move around 14.96. I think we calculated this out at like a 14% to be on the safe side. So let's go back into Meta. And the stock was trading yesterday and closing at 394. Let's put in a 14% move. So 14 by 394 is around a $55 move. So, I mean, for everyone to be like, oh, it blew it off. I mean, yeah, it's a 3 times larger move than the weekly ATR, but it's just a little bit higher. I mean, I guess it's 20% higher than the average earnings, which again is great. So I'm looking to max out profit on this one today or very close to it. Obviously, there's time premium left because I went out to the 9th, which is next Friday. But my $30 max credit here is probably going to be trading at like $26 or $27 today. We're going to find out around 9:30, and I'll probably close it out here in the session. Amazon had another one. Amazon, I have a 165 by 180. We're trading at 169 pre-market. That's up $10. I also have a covered call on the 16th out to 170 that I'm going to look at today. I don't know if I'm going to roll it because I think some of these gaps get filled. The market, this is what's going to be interesting about today's price action. By the way, I'm going to jump in the chat and say good morning, everybody. So Chris is here, Gary's here. Good morning, everybody. Good morning and happy Friday. What's going to be something to watch for today's price action is, great for Meta, decent for Amazon, Apple, not so much. Okay. Apple from a 186 close yesterday is down to 180, and that actually gets us into some full profit towards our 180 by 182.50. We do need to see Apple go a little bit lower, see if it breaks out of this range. It wouldn't be terribly surprising to see Apple, stick the landing here at 180 and then range back and just have Apple sideways. That might be, in fact, what we see in the overall market as well. So if we go to the SPY, it was trading at 492 this morning pre-market. Now it's faded a little bit. So it's not quite at the all-time highs at 492. We still have an expiration out to next week, and we're going to see what this market's made of. For the weekly candle, I think this ended up being a pretty large the week. Pretty large indecision candle. So the high of the week, low of the week, let's check this out. We have a 491 and change to a low of 482. Let me double check that. 491 to 482. So about a $9 candle on an average of 1036 for the week. Looks pretty indecisive, but could also be the next big breakout one way or the other. I mean, and again, I think this rally needs to be checked a little bit from the October lows. I did have, and on the weekly time frame, I thought I did this on another chart. I must have. I'm just going to drag the fib all the way up here, because if we have any meaningful pullbacks, all I'm looking for are fib levels. The 23%, the 38%. I put in a 30% as a Gann retracement. These are in the single digit corrections. So if we go from the all-time highs and pull back, to the 23%, that's about a 3.84% correction. We get to the 38%. Now we're talking a 6.5% correction. I mean, with a 20+% rally, I think the market can pull back 3 to 5%. I'm not saying that it's going to, but it might. So that rally is just around 20%. And like I said, we were at 492 about a half hour ago as I was checking everything pre-market. Now we're at 489. So we could be getting a fade in today. We will see. The CME watch tool for the Fed this week with FOMC on Wednesday. Job numbers came out for non-farm payroll. They blew out expectations by quite a bit. I don't know if the Fed's going to love this data because we just pretty much doubled the forecast for non-farm. We had a revision positive from 216 to 333, and our average earnings took a huge leap from 0.3 forecasted to 0.6, and the unemployment rate went down. Fed keeps talking about softening labor market, wanting to see unemployment near or at or higher than 4%, and it went down today. So higher for longer, most likely. We're going to see if this March. I mean, look at this now. Again, this has been wild all week to see that we were at like 60-40 expecting a rate cut for March. Now it's an 82-17 that there will be no rate cut. So that is the market, pushing back the expectations that the rate cut's coming likely in May. And we're just going to have data moving forward. The next FOMC with press conference is in March. Okay. So let's see who else is popping in this morning. Trish, good morning. Willard, good morning. Gail, good morning. Herschel, good morning, sir. Nice to see you. All right. Good morning, everybody popping in here. I love it. Okay. Let's get a look. I know, buddy. I can't pick you up right now. Benji wants to say hi, but the problem is I've got one arm to pick him up, and I feel like he's gonna fall. I can't pick him up. There's no way. I tried to hold a golf club yesterday, given a couple lessons. It did not work out very well. I feel like I use this reference in Mighty Ducks, like Carl Banks, where he like turns his wrist and he's like, he drops the stick, and Coach Bombay's like, no, can't play, dude. So anyway, I'm in rough shape after a broken arm on Monday. So yeah, I got that going for me. Let's talk dollar index, oil, gold, silver. Let's look at the bonds, the yields. Dollar index still hasn't broken out, but we're going to see a move on the dollar today. Look at that. Man, what a wild week this has been. We said it was going to be a bunch of noise, and it is. So dollar index possibly giving us some hints at where we're going next if we start to see it, and it still doesn't want to break out, not yet. So I want to see a break and close, not just a little poke. As we wrap up Friday here and we kick off a new week, I would like to see a daily candle above here, see if there's more follow through. Or again, this could reject and come all the way back down and still be tight. So we're now 2 weeks indecisive on the dollar. I'm staying out of those dollar pairs, but that is translating into, I think, a really good looking setup on the pound dollar. So eventually, when the dollar index breaks, hopefully this translates into a pretty straightforward trade. Break and go on the pound dollar, or break and go on the pound dollar, depends on dollar direction. Euro dollar is another one that's going to correlate pretty nicely. Dollar index heading up, so euro dollar heading down. This is kind of the structure I have as a bit of a broadening pattern on the euro dollar. This is our swing, and we might still have some equal low support around this 104 handle. I'm willing to kind of chill on the euro dollar outside of maybe a small test at 104 in case this is truly range bound and just kind of stays in the middle of all this junk. But I'm not touching this right now. I mean, right now would be if I'm selling, and I'm not, because the dollar index hasn't broken out with confirmation yet. But if the euro dollar does continue lower, I would be taking this to 105 or 104, protecting profit in here. If it goes lower, great. But I would be looking for I didn't draw that very well. I would be looking for a trend line break, and then look to see if we can take the dollar, dollar weakness, and see if there's a, counter move on the dollar to the upside. Okay. So that's euro dollar. Other pairs, dollar yen, I've pretty much sworn off at this point. It's back and forth. It's not a surprise. Take a look at currency strength chart. We've got the dollar surging post non-farm payroll. We got the yen weak and the Kiwi weak, Aussie as well. So this, to me, with dollar strength, I think we're getting some risk off flows. Take a look at the futures market really quickly. If we're getting some sell-offs in futures, so nosedive. Look at that. Dow Jones futures down for the morning, 0.39%. S&P futures up, just nosediving. So we're definitely getting some risk off flows. There could be some heavy profit taking post earnings, which wouldn't be a surprise. Maybe like some island gaps on some of these, Mag 7 stocks. So gold is, look at this, just all this. Excuse me. All right, how's that live? Gold at 2047, silver at 2262, but literally everything just falling off a cliff right now. Oil down as well. So it looks like the dollar is taking the cake. We're going to see if that DXY ends up confirming today, tomorrow, or today over the weekend. I've got a chart alarm set to see if the daily candle closes. You can see that little clock right there in that horizontal line. If we close above that with the daily candle, I will know, and I'm going to look for a break, pause, and go. We're going to see if the dollar can continue to chew away some of this. Okay, give me 1 second. I'm gonna I'm gonna hide. All right. Okay, so that's dollar index stuff. If you have any questions, have any charts, let's take a look at everything. Type it in the chat for me. Let's look at the 2-year yield. 2-year yield is up, and the 10-year yield is up. Therefore, we'll take a look at our 1 to 3, 7 to 10, and 20. The 7 to 10 is down pre-market, and the shy is the 1 to 3 that is also in pre-market, and the TLT is also down pre-market. So yields up, bonds down, risk off trading, not a surprise. Um, yeah, I mean, it makes sense that with the push in rates higher for longer, I'm curious what that looks like, maybe the next 3, 6, 12 months. But I keep saying this possibly changes. But if I keep going out to December, look, if we don't cut rates to May, there's still a chance for 6 rate cuts this year. There's still a chance for 25, 25, 25, 25, 25, and 25. And that's 6 rate cuts through the rest of the year. That still gets us to 4 to 4.25. The difference is this did shift. Okay, this shifted because it was 3.75 to 4. Now the higher probability is at 4, 4.25, and all that is because the market now bumped back the expectation for March's cut. Okay, all right. So things are changing. This is all subject to change. This is pretty much accurate the day of FOMC for the most part because it jostles around so much. But we will be watching this to see where the story unfolds with the Fed. I wasn't surprised what the messaging was on Wednesday from Jerome Powell at the press conference. If you join myself and Nick Syack with A1 Trading, we did an FOMC session. I was on for like 15, 20 minutes. But yeah, I mean, the press conference was certainly not dovish. I mean, they're not hinting like we want to raise rates more. We have to raise rates more, but it's like they will if they have to. There's no reason to start cutting rates early. I think they're just sticking to the inflation narrative right now to make sure that data continues to support lower inflation. They want to see it go down, low threes right now, which we're at. They need to see it break 3, which I think would be a bit of a milestone. 2 to 3% inflation. We'll see if that's a tolerable level, given the fact that the rates are pretty restrictive at 5.25, 5.5 right now. But all this is changing. What's going to be interesting, and we talked about it this week in the trading rooms, if the Fed is now pushing rates out to May until they cut, are other central banks going to start cutting before that? It's very possible that we see, more dovish central banks like the ECB, like the BOC, like the BOE. If I said those fast, that's European Central Bank, Bank of Canada, Bank of England. If we start to see them cut rates earlier, um, before the May Fed expectations. So that's what I'm watching for. All right. And good morning, Dave. Good morning. Thanks, Gail. I appreciate that. Yeah, I know. I'm not doing anything silly. I mean, I'm just trying to let it heal. I've got to follow up with an orthopedic on Tuesday. I'm just hoping no surgery. I just want to make sure that I get back 100% mobility. But I think my basketball days are behind me. It's not worth getting hurt. I don't heal the same way. Obviously, that happens with age. But I was a little discouraged. I came back from a busted up knee, felt like I was back to 100%, healthy and strong and all that stuff, and then this happens. I'm like, son of a gun. So, yeah, I'll take it easy. All right. What did I say in Discord? I said Mag 7 earnings recap, FX updates, yields, bonds, oil, gold, silver. Let's look at all that. So oil had a huge sell off, and this, in a way, this is kind of good. In a way, this is kind of good because I've been waiting to see if we get a position. If it holds this trend line, there's still a chance for a bounce right there. But if we break this area, come to Papa. I'd like to see oil settle back into some lows, maybe even get a crown pattern off here. But I mean, if I wanted to not be super precise, I would buy oil right now, and that'd be small, and I would buy oil again down here. I'm willing to kind of take a double position, and let's say that I wanted to put on one contract or 2 contracts in total, just buy one and buy a second, and then your average is in between. Give it enough time, and we're looking to see if this responds to the upside. Right? I just think we have some risk off flows going on today. Okay, gold and silver. For me to be bearish on gold, it's not right here at 2031. It's got to break below 2000. I think gold is still pretty resilient. There's a lot of investors looking to, bust gold higher, and I'm very bullish on gold going up to 2100, or I should say, getting to and through 2100. I'm very bullish on gold. It's got to get there though. It's got to prove it. If it does, excellent. But 2000 or lower, I think we could have a short-term correction, right? Maybe this is in fact a rising wedge. I don't want to discount that or discredit that spike because clearly it meant something, but that certainly put in a bit more of a top as the market showing some indecision here. If we break this structure, yeah, I could see a correction, right? I mean, we could see, maybe that top is in fact a high, low, lower high, and we push down to symmetry. But I'd still like to scoop up some gold in here, right? And if it goes lower, I mean, I don't think there's any way that gold goes lower all the way down to 1800 without having the dollar completely rally back up to highs in the last couple of years. So I don't think the dollar's destined for those type of highs. I could be wrong, of course, but I'm still bullish on gold. I'm just waiting. I think it's going to be like the obvious. I'm going to feel late to the party, but if we get to 2100, I'm just going to buy it because I think there's so much upside. Same thing on silver. Silver above $26, I'm going to buy it. So just be careful on picking these bottoms. You know, as Confucius say, wake up with smelly fingers. So here we are at 22.59. I'm just going to wait for silver. I will buy it at $18 all day, and I will start looking at breakout trades above 26. Until then, it's noise. We did the bonds, we did the yields. Let's talk Mag 7 for a second. So we go Apple. We spotted so 180.95 pre-market. We'll see if it stays there or sells off. We put in a we did in the money credit spreads where if correct and price finishes below 180, that gives us about an 80 to 85 cent net profit. I might look at something back in between as well, maybe, but I want to see if it bounces there. So I don't know. I'd like to have it be a surprise. I mean, we beat expectations, but there's some forward guidance that's not all peaches and cream, if you want to say that, I guess, or rainbows and lollipops. The China slowdown for Apple has hurt quite a bit, and I think for a $3 trillion stock, we might be running into some tops. And Apple might look very similar to the S&P because it's such a huge company. It's pretty much been like a safe haven tech play. And so if they're talking about some caution moving forward, could put the kibosh on this blow off top that we've seen for some of these other earnings this week. Okay. Apple, let's talk Microsoft. Microsoft at 406 pre-market, also stuck in the middle of all this. I'm looking to see if Microsoft gets above 420 or gets down below 395. There's going to have to be some volatility where if I want to get paid on this position that we're in. My max risk is 771, $20 max credit. We've got to get some volatility. I personally would love some follow through where we have this thing pushing to flows and we have a bit of a pullback. I mean, right in here would be pretty nice. If we take out this recent low from FOMC and we fall down to let's say 380, I'm totally fine with that. The test that previous high, past resistance becomes support. Let's check, right? Let's check this rally just a smidge, and see if we can get some of these to pay out a little bit as far as some direction. That is Microsoft. Let's go Google. Google, we took some profit on this week. We're sitting at the lows at 140. I think the lows tested on Wednesday just below that level at 139 and change. We paid 589, closed it out for 870, 871 the day after earnings. So that worked out pretty nicely. Happy with that trade. And then we put in some Meta, which again blew off the doors, 457. I'm maxed out here around 435, so I'm going to see what this is trading for in the next 10 minutes. I have a $30 max credit in. It's not going to be trading for that because there's going to be some premium left on the time factor here. Obviously, the value of those buy levels changed. They were dirt cheap, and now they're not. But I've capped my upside at $30. So I'm curious what it trades for. I probably will see this trading. I'll show this live here in a little bit. I'm logged in my broker account, so in 10 minutes, we're going to see what this opens at. If it's trading, I'm just going to close it. I mean, this is exactly what we wanted. We had a $60+ move to the upside. Whatever this is trading for, it's probably $25, $26, $27. It's going to be a majority of that max profit. I'm just going to take it. I don't have to sit on it until next Friday. Okay. Amazon, same type of thing. We're sitting at 170, 169 pre-market. We had a 165 by 180, which means I've got $4 in this trade. I'm looking for more. I want to see if there's any follow through. If we hit 169 and then sell off, I don't necessarily want to put on a bear call spread. Same thing on Netflix. I mean, is Netflix selling off today? 560. It's down a little bit. I need to see. I mean, today I'm going to lose. I'm going to lose on Netflix. I had two trades. So I had a trade here for about, I think it was $8.10 of profit. So that was a good win. But I ended up losing like $14 on a butterfly spread. So it did not come back and come within expectations. I mean, I traded this pretty. I mean, it was a conservative trade. It's just an expensive stock. So net, I did take a loss on Netflix for the earnings play, which kind of sucks. But I mean, Meta's going to make it up. If I'm down $600 on Netflix and I'm up, 11, 12, $13 net on Meta, it washes that, and we'll see how the other ones fall for the next week or two. But anyway, I was looking at this week like, oh, we could put on a bear call spread or both. I mean, I didn't want to take a $5 spread sense, because I wasn't comfortable doing something at the money. It's a volatile stock, and yeah, it is what it is. So I'll take the small loss on Netflix, and it just sets me back a little bit on the earnings play. But that's why we play some other stuff. What else? Tesla's still down, but guess what? When we started to buy some credit spreads, or I should say, and look at some credit spreads. I have the 175 by 170. Tesla is at least stabilizing and holding these lows. So that is a good thing because I know I didn't get paid a ton. I mean, I'm doing $5 spreads. I'm getting paid, $1.50 on each one of these. But I do think that Tesla stabilizes and we have some gap filling coming out. We might push a little bit lower than fill the gap later. If the broader market sells off, Tesla certainly is not in a position to necessarily rally. I heard this morning. I mean, what's interesting is if you're trading Tesla, it's more than just trading Tesla. Right now, you're trading Elon Musk as well. And I don't think that's necessarily a good thing. But we had a trade on here that paid out about $9. I think it was like $8 or $9 during the next day of trading. Ended up being $10 on that full trading day. So that was a great trade overall. I was protective on this one. I took $1 out of it, so I took a very small profit just because I was up like $14 for the week, and I just wanted to protect it. So that would have been a nice little base to add into it. But here we are, just staring at 185. I've got plenty of levels. I mean, I took this out a while. I'm going, March, April, May, and possibly still have the runway with Fed pushing back on rates. Maybe that runway is okay. We've got a pullback coming sooner than later. Data continues to show what the Fed wants are in line, but I think right now there's going to have to be some bigger layoffs. I mean, today's non-farm number is probably like it's probably screaming and echoing the hot job market all over again. So we have to be watching that stuff. All right, I'm good on the Mag 7. Like I said, in about 6 minutes, I'll take a look at Meta because I want to see what that's trading for. Right now, my portfolio, well, I'll see in 6 minutes when it opens, but it should be green on the day. But like I said, the day is not done, and currency strength chart. If we just continue to see dollar rip to the upside, then there's certainly going to be some risk off flows, and that seems to be what we're having here for Friday. Okay, NQ, we'll talk about that one. Yep, for sure. Not DQ, even though I must have ice cream on the brain. E-mini NASDAQ futures. Here we go. Trading at 17,502. Let's go weekly time frame for a moment. I mean, it's a big indecision candle for the week. This is the rally that I think needs to get checked. If you put a trend right there, that's just simple technical stuff. We put in, all-time high that just got broken during the start of the year, right? I mean, this was our end of December pullback, and we have since, taken that out. So, indecision candle. Here's what I look at. Indecision candle. I would just wait for direction, to be honest. I mean, you can scalp within that range for the weekly candle because it's a pretty decent sized week. But if I zoom in, let me take this. Let's actually use the chart lines here. That'll be a little bit easier to then go down to a smaller time frame. So if I go into that high from last week and the low this week, and then take this down to a daily time frame. Okay, couple levels that I'd be watching. All-time highs right here, and the 2023 highs right here. And then just pretty simple stuff like, let's see if this holiday rally gets checked just a tiny bit. Just a tiny bit. So this low to high, we could look at it two ways. One is the way I just drew this Fibonacci where we blow off this level, we have a bit of a pullback to the 236. This is pretty technically sound right here if this is the case. So we have a rally up to this level. We pull back right at the end of the year. We go right up to that 18127 resistance. I could see this pulling back into this area for more demand and buying. Come back and retest, previous highs from 2023, or come back to the same level where we have all-time highs, coming back in this little December pullback. And look, it might be an ominous It might be an ominous pattern where it's like, oh my gosh, look at this. The Qs might be setting up a head and shoulders pattern. But if it just comes back and retests the same level and heads back up here, I wouldn't be, look, you wouldn't be short unless we break the neckline. If we break the neckline, then sure, we can short the Qs, right? Or short the NASDAQ. But if we come back and just retest, this could just be indecision for now. We break and go lower. I would look at testing that low. And from there, that's where the demand's going to sit. If all of a sudden that's the V bottom spot, then that's where I want to get long, right? I'm just looking for a correction. I'm still bullish overall on the major indexes. I think in an election year, I think it's going to be a path of least resistance year. I don't think there's going to be a lot of, I don't know. I'm not saying it's going to be, a crazy sell-off year. It may not be like a gangbusters 25, 30, 40% year, but I think the upside is the market's like quick to race to the upside, and then it might just be violent volatility and range bound trading from some point we establish like this rally of 10, 15, 20%, and then we just fluctuate and we stay volatile and choppy and indecisive all year. But I do think the market's going to cling to like double digits gains. We might get to like a 10%, 15% window, and then it fluctuates back and forth, and it might be violent, but that's what trading's for. I mean, we got to figure out what environment we have to navigate, right? Make sense? So that's what I think. I mean, you're just looking at some indecision this week. If we take out the recent lows at 17.248 here in the NQ, then I would just look at that's breakout to the downside. Top to bottom, anything at like 5% for a correction. That's right around a 6 to 7% correction. But from there, I think that's enough that it justifies, okay, all-time highs have been retested, past resistance becomes support. This little holiday check right here where the NASDAQ pulled back, same type of thing, is we look to see if we have support there around like 16.6 and see if the trend line holds. Okay, Gail's asking about lithium. Sure. Lithium, do you have a ticker? I'm definitely on a uranium play than I am on lithium. I don't know what ticker you want me to take a look at. Lithium in general, I don't know. I'm not as excited about lithium. I think that the EV play right now. I mean, look, you've got Hertz rental cars selling Teslas and trying to get money back on their fleets. You got EV demand going way down. You got the average price of Teslas and used Teslas going down by like 40 to 50%. I know there's a demand, but it's certainly not like it was in 2020 and 2021. So I think right now, like the EV play was a little overdone. I think it's coming back to normal. I think there's going to be alternative energies as well, where like lithium, if it's hard to procure and it's heavy and it's labor intensive, there's probably going to be different plays on EVs. So I don't think that's like every EV car forevermore is going to be lithium. There'll probably be other resources that are used to make them cheaper. So we'll find out. But like I said, lithium to me is look at EVs. The demand is down. I don't think lithium's an awesome play right now. So that's just my opinion on it. I think it's going to be heavily influenced by where the EV demand goes. But like I said, right now, uranium is a play that I'm in, and URA is at 31.91. We bought this in the trading room at 26.95, and I do have some protection on this one because it could be volatile. But I'm looking at some pretty solid upside here, where I just want to be long. So I'm long. I'm staying long. 41 and change is my first symmetry target. And we might talk about this for, I don't know, I might look at a diagonal spread or something where I can do something in the money. If I did like a $28 call and I put that expiration out maybe 6 months, but then against that long call, I can sell something like a 34 or a $36 call. So if I went out like 60 days here and then went out, maybe 14 to 20 days here, that way, if price doesn't go anywhere, I can at least take the long call, lower the cost basis on my debit, and then still give myself some upside. I don't know. I guess it depends on how price is out. I have a 2025 long call on BITO, which is a Bitcoin play. BITO is not one of the approved SEC Bitcoins, but BITO is ProShares, and BITO is one of the only ones that I'm trading right now that actually allows for some options. So I am trading BITO with long calls. I'm trading it with own shares, and I'm just letting it do its thing for the longer term coin without having to get into, I mean, I've got my Coinbase wallet and I've got my off grid stuff, but that's, what I did years ago before. Now it's a little bit easier just to allocate with a stock and options portfolio. Okay. All right, so let's have a quick look here. I want to show you Meta. I don't think it closed, but I'm going to see what it's trading for. So right here, order status. Right now, it's trading at 2076. It's going to max out 27 dots. Let's go 40, 27. I'll see where I get filled. I should get filled here. Filled at 27.44. Okay. So my max profit was $30. I took a majority of that just right now. So 27.44 divided by 30. I just took about 91.5% of that profit. So it was going to max out regardless if I had to wait all the way to expiration, which I could. I could wait all the way to next Friday. But I'm just going to take the profit today, and that should be a realized gain of, well, it should be over 12 bucks. So let me take this back here. Let's go to Meta for a second. So I just closed it out. Let me update this in Telegram. I just closed out for 27.44 right here. Closed for 27.44. So made just shy of 12 bucks on this trade, and I'm pretty happy with that. Obviously, if I, sold a 440 or 445, that would have been even better for more upside. But we calculated this out. If I did a 440 or 444, I would have paid probably 17, 18, $19 for it. So, I thought we we played it how we were going to play. I mean, I priced it out, looked at the probabilities and patterns. Um, I just didn't want to pay 20 bucks on this. So, I mean, we paid 15 for Tesla. We paid I guess I could look at my spreadsheet, but anyway, let me update this. So this is equities on demand, trade management update, Meta, the 2.9 earnings, Condor spread, paid 15.77, closed for 27.44. Net profit should be 11 and change, like 1170. So 27.44 minus 15.77, 1167. 1167 per contract. It's about, and that, I mean, that return is pretty decent, right? I mean, if we paid 1577, so 1167 divided by 1577, that's a 74% gain on that position. Not too shabby. So that's posted for equities on demand. That's posted for Delta Trader, and I'll take the update here as well and get this going. I also want to take a look at Amazon to see if that time premium is helping us get into profit. Here is my meta trade. So 27.44. That's a win. 11.67 profit. We'll take that all day. Let's have a look at Amazon. 169. Let me see what Amazon is trading for right here. So Amazon, AMD down, Amazon up 70 bucks. So I've got the 165. I want to see if this pushes higher. So I also let me log into something here. Let me log into my TD Ameritrade account. This one should be pointed to the upside today. So let me check something here. All right, we're up about 10% on the account, 3.5% just on the day. I'm going to check and see what my position is doing. So I'm up $5,600 on Amazon. I'll show you right here. So Amazon up $5,600. My call, which is out to 2 weeks from now, 170. I'm not roll this yet. I'm not going to roll this yet because I want to see if price settles down a little bit. I can roll this out to next week. I'll let this kind of chill over the weekend and see if we, in fact, push up above 170. Then I'll probably look to roll it out. If I got another month, I want to roll this up to like 180 or 190. I'm looking for all-time highs here. Amazon gets to 190. That's fine. I own this thing at like 130. So I'm certainly trying to, $60, $70 a share if I can. But I'm going to let this thing run a little bit. Okay. And then on my earnings straddle side, up $100 right now. I'm going to see if this pushes up to like 175 or 180. Again, it's when it wasn't too expensive. So I paid 533. If I can get this to close at, $2.50 net profit, or I mean, obviously, if I get to $5 profit, that'd be ideal. We're maxing this thing out around 15, and that would be out to the 16th. So based on time, I'm probably not going to get my $15 max profit, but I could certainly look at if I could close it out for 10. If it gets to 175 or pushes, 180, I could probably get $10 or more out of this and give me a net $4 or $5. So I'm going to let Amazon continue to see if it pushes a little bit higher. But I'm bullish on this stock, and this is one of the stocks that I've been wanting to buy. Ever since we had our 2023 turnaround, this is the one that didn't have all the AI chatter. Now it is. You start to see in their earnings calls and transcripts, there's way more AI talk in Amazon. Okay, if it helps the algorithm, AI. Just kidding. All right. Anything else for this morning? Again, currency strength chart. Dollar hasn't relinquished its push today. Again, stocks are still going to rally, but ultimately, what is the market doing for the index? We're up a fraction on the day. I think that's just a smidge of a gap higher, but we're not at all-time highs, right? So even a blow off on Meta is not dragging this higher. Apple is down. Amazon is up. Google was down, right? You've got some big companies that are fixed right now in the Mag 7 space. You could even argue that it's no longer the Mag 7 because Tesla's down so bad. And it was, I think Tesla just got overtaken by Eli Lilly this week for market cap. That is is it ELY? Or is it Lilly? LILY. Oh, fudge. I should know this because I lived in Indiana right by it. I just saw it there. So it's LLY. There it is. Trading at 662. All thanks to Ozempic. AbbVie. Ooh, yeah, we got AbbVie. Let's check that one out as well. So Lilly is now $629 billion, and I think they just surpassed Tesla, which is 590. So congratulations. One shot in your stomach for, I mean, it's supposed to be for diabetes, but I know influencers made it popular with weight loss. Let's check AbbVie. 167. We pushed up to 170 and we faded. So let's see if we can. It's going to be a noisy little candle, but I've got this one out to the 16th. So we did a 167 by 167.50 by 165. If we revisit highs at 170, we paid 481. That would have been 250 to the upside. And to see this thing break the highs. So chart alarm there if we break the highs. Actually, I'm just going to move this up. Well, I just want to get some notification. We got a noisy day today. Oops. Yeah, fudge. What? Give me a quick AV check. We still good? Type in a wire yes for me. You can still hear me. See me moving. Just want to make sure we're still live. 171 and change. Okay, good. I guess if I looked at a roll right now on Amazon, I could probably go out another month and get a credit for that. I think I'm going to try. Premiums are much higher. I can probably roll it up to 180, 190 right now. I think I'm going to. Let me see. Let me price this one out. And if you have, thanks for confirming. If you have any other charts or questions, type it in the chat for me and we'll take a look. I'll go for another probably 10 minutes. It's 40 minutes. I don't care. That's why I wanted to start earlier so I don't feel like I'm rushed to squeeze in 30 minutes. So we've got time. Let me get my code right here. All right. Give me a moment. So 146308. Lloyd, is that you? I think it is. See LW. What's up, dude? You still going by Pip Walker? Lily's up as Elon needed more meds to get it. Yeah, there you go. All right. So here's what I wanted to price out. I have in this account, I've got a 170 call out to February 16th. I'm going to see if I can roll this out and up and get a credit for it. So my covered call is down because price is up above 170. But because premiums are going to be higher, I could probably roll it out in time and get paid enough to cover the cost of this loss. That's what I want to do. Is if I roll it, I'm going to roll it for a credit. So I will show you that right here. And I'm going to try to roll this all the way up to all-time highs, if not higher. And just as long as I can collect a net credit, that lowers my cost basis. So let me put in a roll out, and it would be a buy to, or I'm sorry, it's a sell to open call. So it's a buy to close, and then I would sell a cover call against it. Share wise, I'm in 200 shares. So I have the 216 170 call right now trading for $4. If I want to roll this out to, let's say, the monthly, and I want to roll it up to, let's say, 180, that's going to cost me money to do that right there. If I want to roll it up to 190, I'm going to go out to April. That's still going to cost me money there. So here's what I could do. I could roll this. Let's see. Here's what I'm curious of. I'm going to roll this out as far as I can and up as far as I can, and give myself just all the runway possible. I just want the share price to continue to appreciate because I think it's in good shape. So if I did a June 190, I can eat this right here, where I can take the 420 loss and still walk away with another $1.50 to lower my cost basis on the shares. Okay. Now the downside would be if price blows through in the next 4 to 5 months. If it blows through 190 on Amazon, then I'm going to be in the same situation. But now I have till June, and I have maybe a runway to like December to roll it before it gets a little bit ridiculous. So let me see how high I can go. I can still get if I go out another month. Really? I can't do a July 200 and get paid for that? I could do a smidge of a debit. I can do September. Okay, so a $200 call to September. That's not bad. That gives me another $30 of upside. I know that's a long time away. What's that appreciation? Amazon to get to $200 from right now. We're trading at 171. If we get to $200, that's another 16, 17%. Amazon, I just think it's going to be one of the better performers this year. So how much higher can I go? 210, I still get paid for it. 215, I don't. So I could do a 210 out to September, give myself $40 of additional profit, which is great per share. I could still get 55 cents for that, and that covers the cost of everything. That's just time, and that still gives me another 3 months to roll if I need to, if price continues to go up. So let me see if I can grab this for 75 cents. So this would be, let me put on a trade here for options. This would be a custom trade. Amazon. Oops, I don't need the option chain. I know what strikes I want. So I'm going to add a leg here. So I sold the open, so I'm going to buy to close. I have 2 contracts on the shares that I own. Just going to double check those positions. So I have 200 shares. So options, custom. Is everybody okay with me doing this? Just doing some management here. AT&T, Chris will take a look at that. FCX will take a look at that. Jedi Cloud Walker. Okay, I stand corrected. Okay, so it's a buy to close. Let me add another leg here. So buy to close, 2 contracts. Expiration was the 16th. Strike was 170. Right there. And that was a call. And then a sell to open, 2 contracts. I went out to September, and I went out to 210, and I still got paid on this trade. So give myself some runway, 210 call. That would be a credit that I'm looking for. Right now, that mid is 75. Let me see if I can get filled for 77. If that doesn't fill, I'll cancel, replace. I'll try to get, okay, it just got filled. Perfect. Okay, so that on my chart, I just rolled this out and up. So 216, 170 call, 140.30 break even. I just did that by 77 cents. So now my break even, 140.30 minus what I say, 77 cents. So 139.53. 139.53 is my break even. And now I have the 920. Yep. So the 920 expiration. 210 covered call. So I'm gonna give myself $40 more upside, lower the cost basis by 77 cents. And then the rest of the game for me is going to be just protecting. I mean, if I put in, maybe a quarterly put to protect myself, protect any downside, that's all. But I'll give myself room. I mean, I'm pretty excited that, a 210 is up here above the all-time highs. I think Amazon has room to keep running. So I like Amazon. If we get a gap fill, by the way, if there's anything that happens earnings wise where we pop up here and we pull back, I wouldn't mind just doing some straight up credit spreads on Amazon and stay bullish on it. What strategy are you using for the Amazon option you're managing? It's just a rolled covered call, Lee. That's all it is. I had a covered call. I'm just rolling it out. I'm rolling it out in time and up in price so I can have more profit potential. That's all it is. So it's a rolled covered call. FCX. Let's take a look at that. FCX. That should be a copper play. And what are you talking about here? Pennant pattern on the daily. Yeah, I could see that. I think this would be something to keep an eye on. There's two ways you can look at this. One is we can do some premium collecting if it's decent. We could do an iron condor where you can spread this, do a bear call spread above and a bull put spread down below. I think we're through earnings for this first quarter. I think we just had earnings on the 24th, so they beat expectations, but price hasn't gone anywhere. So I might look at this one today during the 10 o'clock class, and maybe there's something we can do in the next couple of weeks where if it stays this way, we're at $40 right now. If I could do something like a 5 bear call and maybe a low 30s bull put, maybe do an iron condor, grab 50 cents to $1. If it, I mean, it's going to depend on the premiums. This one may not offer the best premiums. Maybe it does, maybe it doesn't. But I think that's something I would look for. Otherwise, if you don't want to trade if you don't want to sell the options and collect the credits on that, then you're going to wait for a breakout. And one thing that's nice is this breakout, if and when it happens, FCX has been on my radar since we started to see this volatility. FCX, if we do break to the upside, this is what's exciting. I mean, we're talking about FCX going from 44 to 64, give or take, a couple dollars, obviously, but having some traction and breakout space to the upside. I would definitely be all over that trade with long calls, credit spreads, even if I want to own the shares. But I'm just trying to keep options trading at the forefront. I don't really want to own a bunch of shares unless I'm going to be actively lowering the cost basis with covered calls and stuff like that. Okay, so that's what I like on FCX. We'll talk about that more at 10 o'clock next in demand. AT&T, I think was up to like $18. It was. We had a high here around 18.17. Is trading at 17.79. I own 458 shares of AT&T. I'm happy to collect that 6% dividend. We bought this thing at $16, $15. We've got some 16 by 15 credit spreads. Let me scroll down in price here. AT&T. So overall, I have the shares. I have a protective put that I did just for earnings that's going to expire for a small loss today. It's 16 cents, no big deal. And then the 17 by 15 profit, but I'm going to let that continue to run. This should be a max profit of around $1.14. and I'm just looking to hold this thing and lower the cost basis by, I mean, I did only one contract. I'm going to lower my cost basis by probably, oh, I don't know, 20 cents or so. But I own the thing at like 15 bucks. So I'm just trying to work the cost basis down. I'm actually might look at AT&T right now and put on a covered call. If I did like an 18.50 or 19, it depends on the premiums are decent. AT&T covered call. I don't want to get the shares called away, but I have 450 shares. So I could do a 1750 today. I don't want to do that because I don't want to get it called away. I could go out to next Friday. This is the problem, right? I mean, do an $18 covered call, lower my cost basis by 13 cents. But if price gets above 18, I'm gonna have to go out further and probably higher. And this is the problem: is it just doesn't offer like great premiums. So 18, I mean, I'd be okay like getting it called away at 20 bucks, but I'm curious if I did a $20 call, how far do I have to go out to actually get this to pay me something? Go out to March? I mean, am I doing a covered call for 4 cents? Like, no way. It's a pointless. So I think my best bet on AT&T is if I wanted to lower the cost basis, I could do a naked put, or I could do a strangle. So I own the shares. I do a 1, 2, 3 contract strangle where if I do a sell a $20 and then sell a $16, something like that. I mean, I'll look at the deltas and see how it prices out. But if it goes nowhere for the next week and I can get 10, 15 cents, if I have the buying power to do it, it's going to lower my cost basis. And that's again the beautiful thing about options. If I own AT&T here and I use options to lower my cost basis, at some point if AT&T runs, and the stock price is higher, if I'm actively trading options to lower my cost basis, that's my profit potential. So instead of buying and holding where you make this much, this would be, if you just buy and hold and the price goes up, you get that profit. But if you trade options around this to lower your cost basis, you get that profit. I mean, you can exponentially make more money by actively managing the portfolio. So it just the problem with this one is the premiums are garbage. That's all. Okay. I think I'll wrap it up there. It's been 55 minutes. It's been a long form session, but kind of exciting stuff. Let's see what happened on the dollar. Is it fading at all? Is the stock market up? Not really. It's just hanging to those highs, 489. We might poke the 490, the 492. We might break the 492. It depends on what else we're seeing here. Dollar's kind of topped out for the morning, but we could also, I mean, look, here's what we're going to see all day. If the dollar drops back down, things are rebalancing, earnings, positive stuff, optimism, buy the dip, whatever, all that's happening. If the dollar continues higher for the day, there's some profit taking going on, and we have some corrections that are probably coming. The market was kind of waiting to see, okay, we've justified pushing these highs, but there's possibly some heavy profit taking. And look, everything Mag 7 is overvalued. Everything Mag 7 is probably overbought. Everything on the indexes overbought, technically speaking. So I wouldn't be surprised if there's some repositioning, maybe looking for, lower value tech, not lower value rather, but like lower cost tech, and maybe some reallocation into value versus growth. We'll find out. But anyway, I'll take what I can get. CPRT. Okay, we'll make this one the last one for the day. CPRT. Copart, specialty stores, retail. What do they do? Online auctions, vehicle remarketing. Okay. I mean, it's good to see that it's not a Carvana, which has been pretty much worthless. Sells vehicles principally to licensed vehicle dismantlers, rebuilders, repair. I don't know. I mean, this low. To me, I would be cautious of that high right there because something tells me that if we have a double top, I'd look for a double top. If we have a double top right there, I'd look for a correction. That's just me. I think this run is ridiculous, unless I'm missing something fundamentally, you know. But this is already up, 100+%. Um, I would rather look. And again, I trade options. I wouldn't do anything crazy like sell on margin. But if we came back up to the highs again, I'd look to sell that and see if it fades. Yeah, that's my initial thought. I've never looked at the stock before. So let me check it out fundamentally really quickly on Simply Wall Street, CPRT, and see what it looks like. Hopefully it says they make money. I'm assuming that they do. I mean, yeah, financially healthy, past performance is good. Forecast to grow 9.15%. So check some boxes on the snowflake analysis. There's no dividends, but price action wise, I don't love that. I could be missing something, but like I said, after this thing rips and has this high and pauses and blows higher, to me this is divergence. So I would see if it stretches above the highs and has extra divergence, I'd probably fade that move just with options. Okay. All right. I'm gonna let you go. I'm gonna take a sip of coffee, start the class up just after 10 o'clock for equities on demand. Really quickly before we go, if you're in the Discord group, you know, be more active, be more vocal. I've had a couple private messages on the private instruction side, so I'll take care of those workshops in the next couple weeks. Playlist wise, I want to start getting those strategy videos out where I'm just doing like a one-stop strategy shop, something catchy, something whatever for a playlist. And we'll be back on Monday at 9 o'clock. Okay. I hope you everyone had a good week. It was nice to be with everybody, and I will talk to you all soon. All right, everybody. Bye.